Hello, everyone. Welcome to another edition of the Empowering Entrepreneurs Podcast. I'm Glenn Harper.
Julie Smith.
What's going on, Jill?
For us, it's 2026 is coming, so we've got tax season looming. For us, we have quite a different mentality on it, right? So
Correct.
for us, it's all about being proactive, understanding everybody's situation. We believe that April 15th is just another day and it shouldn't be as stressful as everyone makes it out. So hopefully this episode will help relieve everybody's stress and kind of how you can go into tax season for entrepreneurs and for our listeners in regards to what you could do now. So April 15th really has no meaning to you.
What's that? The 7 Ps, prior, proper planning prevents piss poor performance, something like that. That's like a thing. If you wait until April 15th to do your tax planning, well, it's too late. So what we like to say for our clients, what we execute on is we start that process early in the year, but when we try to get to the end of the year, we kind of know what's going to happen with them. We know what bracket they're going to be, what things look like. And then we start down that year-end checklist of what kind of tax saving things should we be planning for and preparing for. And some of them, it's applicable to, and some of them, it's only a couple things. But ultimately, the first thing you want to do is make sure that you're maxing out your employer's retirement plan, your elective deferrals. Are they going to be a Roth contribution or a traditional in your 401k? Make sure you got that set up. You make sure your withholdings are right to make sure you have enough tax being paid so you avoid any penalties. Certainly want to look at your portfolio and recognize, do you have any losses or gains in there? And if you have gains, or even if you don't have any gains, you maybe some losses, we want to do that tax loss harvesting, which is when you want to try to offset your gains by selling your loser stocks to offset that. So you don't have to pay tax on that. We call it the phantom income that's sitting in your investment account, and then sell enough to cover that plus $3,000, because you can always take your losses to the extent of your gains, plus take another minus 3,000, and you carry the rest forward. It's a wonderful thing to do. So if you had some big gains early in the year, you want to make sure that you utilize that opportunity through the rest of the year. Certainly, some people certainly can do their Roth IRA contributions or traditional IRA contributions, but a lot of our clients are in the tweener phase, right? They may or may not qualify for it. So we have to wait till we do get their taxes done before we can do that. Charitable contributions, that's a huge thing. Some people love doing that. You always take out, if you have an RMD, always take that and put that directly into a charitable organization. And if you do that, you not only get to deduct it on the front page of your tax return, so you don't pay federal and state tax on it. It's great. If you don't have the opportunity with an RMD that you're taking out, you certainly would want to do an itemized deduction for it. But with the new standard deduction so high, it's really hard for a lot of people, unless they give a lot of money away, to take the charitable deduction. So if you're a big charity person, you're saying, well, I like to put away 15 grand a year. Well, why don't you think about a donor advised fund? And you put like 50 grand this year so you can deduct it. And then in the donor advised fund, each year you can peel off $15,000, but you got the benefit today. We call that, charity stacking and donation stacking, because it lets you take advantage today versus giving it every year and get no benefit. Why not put it all away today, get the benefit, and then dole it out later? So that's always a good one to do.
I mean, I can tell how passionate you are on this. It just really got your blood pressure up.
Well, I just like anytime you can, again, we call this the low hanging fruit. If you can just do these few things before your end, you can see a difference in your tax return.
Well, and I think this year is a little bit different too, because not only all the things you mentioned that we've been doing in the past, but now we've got this big, beautiful bill that just said, okay, here are 5 more checklist items or whatever the case is that people are eligible to do to help with, some of this proactive tax planning.
Yeah, and it's so hard. Just like everything in the tax code, you hear it and you're like, oh my God, I get to do that. There's always a limit. There's always a threshold. There's always a filing status that you may or may not qualify.
That's always me.
It's believe it or not, it's most everybody. So what you want to try to do is, if you're a client of ours, we've sent that out to say these are the things you want to look for. But you might be able to deduct the interest on your new car, depending what happens. There might be some energy efficient things that you can do. There's all kinds of, maybe your overtime is not taxable. Maybe your tips aren't taxable. Maybe you can get the FICA tip credit because you're now a service business, like a masseuse or a hairstylist, that you don't have to. You can get a tip credit on the tips that you receive as an employer. There's all kinds of things that are in there. And so it's really important that you reach out to your advisor and say, hey, what can I be doing here? and what are the kind of things that would be helpful?
Well, and I think that's really important is most people don't start thinking about taxes till, those tax forms start coming out, and by the time you're getting the tax forms, it's really hard to do anything. So, start now, start looking at or, start communicating with your advisor, your CPA, because pulling those levers is really important, but it's really important before year end, not on April 15th because it's really hard to go back in time.
It's always a fun thing to talk about because as a CPA, we're here, we're we're what's called potential. We're waiting for the input from the client to say, "Hey, I need something. I did something. What should I do?" When that call comes in, boom, we put that energy in motion and we can come back to you and say, "Here's what you should do." We can't guess. We can't, think what you might be doing or what you did. We don't know unless you share that with us. And once you share with us, then we start the conversation and then we can go down the path to do all these things. And it could be, again, income shifting with kids. It could be putting in a retirement plan, taking advantage of some credits with the things of that nature. There's so many things we can do. Change your entity structure, put in a management. Like there's so many things that can happen. But we can see some things that you're doing because we do your monthly books, but we don't know what's going on behind the scenes for your personal things that may be part of the business that we can do. So if you're thinking of something or
Or
you heard something, please reach out. I can't help you.
perhaps you need to buy a car before year end?
Some people like to do that for a nice heavy vehicle. Who doesn't want to get one of those? And again, sometimes it hurts, and sometimes you can do it, and sometimes you can't. It depends on the circumstances. You want to throw a short term rental in. You want to go buy a property on the beach somewhere. Make sure that it qualifies. But people go buy it, but they don't know how to set it up, and then they come and see us, and we're like, "Sorry, it doesn't qualify." Don't be that person. Reach out prior to doing something so we can say, "This is how you do it," so you'll be successful in it.
So if
So
I
important.
could tie all that up with a red bow,
Please.
I think what you're saying is you need to be in constant communication with your advisor, your CPA before you do things so things can be set up properly so that on the back end we're not here to clean up a mess or you can't fully take advantage of the tax code. I also think what I'm hearing is and kind of the whole theme is start tax season now and be
Mhm.
proactive so that come April 15th, it is just another day for you because you already know everything that's going to happen. We've been able to pull all the levers. You've been able to plan and be proactive in regards to that. Take the stress out of it. There's no reason to stress about tax season.
No.
The only reason you stress about tax season is when you keep putting it off. And when you put it off, you certainly can't pull any levers or do anything advantageous.
I always look at, I always used to say, like, I don't know if I can say this, but I always look at like the tax season is the Super Bowl. But you're not gonna be successful in that big game unless you don't do the hard work prior. And so what we're
So you
trying
got to
to
buy
do.
tickets to the Super
Yeah,
Bowl
yes.
before it happens, is what you're saying.
Correct. So
Got it.
if you put in the hard work now and work through those things and put your game plan together and look at us as a trusted partner, not just a task that files your tax return, look at us as more like we're here to help you get a better result. We put that work in all throughout the year. When we do get to the big game and then tax season, we already know the answer. We already did the hard work. It's just like, yep, check. We did it all. Perfect. Good job. Way to go. If we don't do that, then we're sitting with the tears of regret and go, "Oh, if you just would have called me, if we'd have just knew this, maybe next year we can get it." We don't want to have that conversation. It's the worst conversation to have. We want to be like, "Hey, well done. Everybody's a hero. Everybody wins on it."
We all want to get the trophy at the end of the Super Bowl,
Correct.
right?
Everybody wants a
So
trophy.
go buy your tickets now for the Super Bowl so that we can properly plan for it. And then hopefully by April 15th, we're all holding that trophy from the Super Bowl, right? We're all just
It
passing it around
is.
because we've all done the work that it takes to get there.
Maybe it's the Stanley Cup because we're all going to pass the thing around. Maybe
Okay,
that's where we're going to
whatever it
go.
is,
Either way,
I
it's
I
all good.
lost it.
Well, I think that's probably the biggest thing we can do when we go into year end. And remember, we have the conversation now. Again, it's just a conversation on the client's end. On our side, we put the wheels in motion. You just got to answer some questions and have a conversation. We do all this for you and tell you
Yeah,
what to do. You don't have to do it. It's not hard. It's just have the conversation. Sound good?
sounds
Who doesn't
good.
want to do that? Well, hope you all enjoy your holidays and look forward to hearing from you for year end. And if everybody listening to this, please talk to your advisor and make sure that you're implementing all these things. I'm Glenn Harper.
Julie Smith.